Okay, so now no indicator stands on its own. If these indicators worked perfectly and always gave you the point of entry that was perfect at the bottom and always gave you the exit point that was perfect at the top, then money would be a lot easier to be made.
Yes.
So what we look for in the RSI, this is the next level, and I think we can make it simple, okay? But we're looking for something called bullish divergence or bearish divergence. And we're going to try to find an example of that in Disney. So here, let's look at the stock. So to do that, we're going to return to the daily view. We're going to go here to the right where our price is, and we're going to drag and click and drag it upwards so we can see a little bit more depth in our chart. All right, so what we're looking for here is we're looking for this is a perfect example of bullish divergence right here, okay? So the stock is oversold, okay? And it moves up here over the next couple days until we get to a higher high, okay? And then the stock price drops exponentially, okay? So this is actually, yet the indicator does not come down as far, okay? So the first indicator broke to roughly 16% to the oversold. But this recent indicator with a lower price, even though the price was much lower, the selling pressure on the RSI was not as much. It was 21%. And this is what's referred to as bullish divergence, okay?
And what does that
So
mean?
what it means is that even though selling pressure came in and it pushed the price down, that the volume of buyers over the volume of sellers was not as high as before, which means that even though the price is going down, it's drawing and attracting more buyers. And so what if we wanted to imagine, or if we were speculating that this had a much further downward price potential, we would actually want to see the pressure increasing to the downside.
Yes.
So here the pressure is at 16% and the price is at $141. Later on the price drops further, but the pressure is not as much, which simply means that there's fewer sellers, even though the price is dropping quicker, okay? There's more momentum down. There are actually more buyers there sucking up those prices.
Because they believe that they're getting it at a good price, and they are expecting the bulls to take over.
So just to recap, bullish divergence would be whenever you have a lower price but a higher percentage of drop below in the oversold zone. So the price percentage down the first time it entered the oversold came all the way down to 16.93 roughly. And the price got bought up, but again, more sellers entered the space, pushing the price down further and faster, but not at the same percentage. The lowest percentage we see here was 20.95%, which simply means that this particular drop was met with more buyers. And this is referred to as a bullish divergence. And the same can be said for a bearish divergence. So let's see if we can find an example of that. Okay, right here. So here we are on July 12th, and we see that there is a big upswing in buyers, and it pulls us all the way to the 65% area, right?
How else can we tell it's an upswing in buyers?
Okay, we're just right now we're comparing the
There we
price
go.
action. Okay, so these green bars up above
Represent more buyers.
Yep, represent more buyers, and the price is going up. And we see that the RSI is also indicating that bulls over bears by mathematical equation the bulls are exceeding the bears. So it pulls it up above the 50% mark, which means that the bulls have control of it, right? And so now so here we have the starting point of that, which was right here, okay? And the price was $184 roughly, okay? And it had a momentum in the RSI up to 65.72. Okay, but now when you come back up and the price dropped, you come back up and the price action drove it all the way to 187, higher than before, but the momentum indicator here was down at 59, lower than before. That's what's referred to. Even though the price is higher,
Right.
the momentum is lower, which this is what's referred to as a bearish momentum, bearish indicator on the RSI. And so if there's any professional traders out there, they were saying, yes, I'm at a higher price, but I better take my profits. I better sell out because the momentum to keep this price going up is not there.
Hence the red candle.
Hence the big red candle, because everybody else saw the same thing I saw, and it just plummeted the price, right? Which kind of created another buying opportunity. You also can see when I trade the RSI, I also look at these areas of percentage support. Right here, 41% has been a support level. 1, 2, 3, 4, 5, 6, 7, 8. I mean, 8 times at minimum and very close to it. Anytime it sold into the 41% was a good time to buy. If you were looking to do a short trade,
Right.
that, if it came down to 41%, you could even in a short trade, don't ever drop all your money at one time.
Right.
Even in a 24-hour trade, divide up the amount of money that you're intending to put into it.
Yes.
Okay, because you're doing it over a short amount of time.
Right.
Maybe it's 4 different trades. Maybe it's
Exactly.
6. Maybe it's every hour.
Right.
This enables you to spread out and get an average price.
Yes.
None of us are smart enough
Right.
to guess the perfect
I
price.
am the DCA king. Dollar cost average. Even if it's 2, even if it's 4, you're still dollar cost averaging rather than going all in at once.
Yeah, to add to that, I found in my own trading, and me and Larry have talked about this many times, that when you take that first entry point, it's amazing how you get a special set of glasses.
Yes.
That you're enabled to see the stock from a new fundamental and technical view.
Yes.
All of a sudden, after
Because you have skin in the game.
you entered your position and you're like, wait a minute, there's bearish divergence here that I didn't see a moment ago.
Right.
So start with a position, and then it'll give you a better sense of urgency and focus to look at the fundamentals and the technicals with a sharper eye and help you make a better overall decision. Well, right now we're going to look at volume.
Okay, let's look at volume.
And and a lot of people might even not think that is an indicator, but I'll tell you,
it's very important.
as a seasoned trader, volume, if you're having more of a longer term investment, volume is obviously second only to price action.
Yeah.
And volume tells you a lot about what's happening with that stock. So let's look at volume as it relates to Disney. To add the volume indicator, we're going to go right back here to the top bar. We're going to go back and select indicator, and we're simply going to search volume. And we're going to choose the volume with no other text to it, just the word volume. And we're going to then it pulls up our volume, right? And we're going to look at RSI, volume, and price action all together at the same time. And we're going to stay on our daily, and we can just go back to a year view, okay? Now, right off the bat, as I'm looking at this, this new indicator that we've added, when this price was at 174, okay, when this giant red volume bar came, into view,
Yes.
trust me, this is what's referred to as the smart money, okay? And it caused this stock to jump down close to $20. Or no, it's from, we'll just say roughly 176.
The gap down?
Down to 160, so close to $16. And some people might have viewed that as an opportunity to buy, but truthfully, this volume indicator, if we're going to follow trend as your friend, it meant it's time to sell.
Yeah.
And we see that every other day after that, this continued to sell off all the way down to 142, okay? And
can we blow that up a little bit?
yeah, let's see if we can.
There we go.
I'm going to.
That's better already.
All right, let's go back and add volume. This will give you guys another option to view it. Okay. We're going to spread things out a little bit.
There we go.
Again, some people can stop their journey of becoming a technical trader simply off of not knowing how to adjust that screen.
Yes.
Whether it's in Webull or TradingView,
Yes.
it's all done the same way.
Right.
Okay. So yeah, so right now we see that this giant red volume bar, which dropped the price close to $16, was not a signal to get in at this discounted price, but rather a trend indicator. This giant volume bar forecasted that in the coming weeks, there was going to be continued selling pressure, which we saw. Here, we begin to see that some buying, this larger green bar came in. These are people beginning a dollar cost averaging position, right? But it wasn't until we get over here, and we're really trying to look at the big bars and the small bars.
Yeah.
Even here, we saw this massive red day, okay? Not an indicator to get in.
Right.
But when it was followed up with this decently sized green bar, this was the point in which you could say, okay, now some volume is returning to this trade.
Right.
And volume is the smart money.
Right.
Volume are the $1 million purchases of Disney.
Yes, some
The institutional
volume. Yeah.
The institutional whales. And even though this price of Disney, it moved here quite a bit this day, it really is just a changing indicator of a coming trend. And sure enough, we see that even though the price moved, we are ultimately moving higher after that green bar. So price action, learning the candlesticks a little bit, which we didn't get into, but we will.
Right.
The next indicator would be volume, which is pretty basic. You're wanting, if you see a giant red bar,
Yes.
wait.
Okay. So what we're going to do now is we are going to have another shorter segment. And what we're going to do is just recap this.
Okay.
Let's talk about the bars, what they represent, and then we're going to show your two key indicators and just give a brief, here's where we buy, here's where we sell.
Okay, I think that's great.
All right.
Let me actually, let's go to the chart for a minute, Larry. You know, candlesticks is, there's a great study of candlesticks. Every shape, every correlation of one shape next to the other. I'm going to simplify this for everybody here, and we're simply going to talk about wicks and tails.
There we go.
Okay. The wicks are all the lines that are above the body of the candlestick, and the tails are all the lines that are beneath the candlestick. Okay.
Those very thin lines are the tails.
Yes, this
and
little
the top are the wicks, just like a regular candle.
Yes. So if you want, in your beginning journey of understanding candlesticks, if you simplify it to a really simple view of wicks and tails, you will have a great deal of knowledge of how to view the price action. So we're going to look at this. So right here, we're going to use this example. Now this is a green bar with a giant tail, all right? And the tail means, on the green bar, means that the downward momentum of the stock was rejected by the bulls, that they began to load up and buy and drive the price back up. And so this shows selling pressure rejection. In this zone, buyers came in and the sellers got rejected, okay? And so a green bar with a giant tail indicates that the buyers flooded back into this. And let's go and find a good example of a wick, okay? So
see one
right here, or actually either of these are
blow
good.
it up so they can see.
Yes,
it.
let's find this area and spread this back out.
There we go.
So right here, this is almost a doji in that it's got a similar sized tail as a similar sized wick. And whenever you begin to see a doji candle is any candle that kind of looks like a plus sign. Okay, these are dojis here. And dojis mean indecision. The price came up to this point and the bulls and the bears fought equally over the momentum of the stock, and it ended in the middle.
Gotcha.
It ended as a draw, right? And typically, if you see a doji at the top of a candlestick area, it means that indecision entered into the stock when it was going up, which means it's likely not to continue to go up.
Correct.
If you see it at the bottom,
It's almost like meeting resistance.
yes. At the bottom, let's say here's somewhat of a doji here. At this point, it began to face some selling pressure. You see that the trend had been down, right? It went a little further, came back up, and the bears said, no, we want to keep pushing this down, and it created a doji, right? This was a moment of indecision, and it wasn't until it broke out above it the following day that the bulls said, no, we've won.
Right.
Okay? So I really want to just remind you, wicks and tails, if you see very high wicks, which are at the top, it means that the momentum to the upside could be slowing.
So as you guys can see, I'm playing the devil's advocate. I'm asking, I always think about frequently asked questions. So I'm being you guys, and I'm asking all of the questions in real time because I found this helpful in the way that I learn. You know, I keep saying it throughout this entire course. Talk to me like I'm 3. All right, let's go.
All right.
Yep.
So we're going to recap. We're going to go back to TradingView. We're just going to point out the different views and indicators that you can use.
Straight to it.
Yep. So up above, you've got your ticker symbol here. You've got your candlestick choices here. So let's say we go right now to the 4-hour. That gives us 4-hour candlesticks. And we also want to see 4-hour candlesticks over a specific area of time. And then we come down here, and that's indicated here. From one day.
So every candlestick represents 4 hours.
Correct.
I'm gonna be saying all of these basic things so people can understand.
Yes. And then the width of the chart view and all the candlesticks that are in it represent a length of time, which is chosen down here. So if we want to choose 1 month, then we see
Every 4 hours.
well,
in
in
one
this
month.
case, when I changed it to 1 month, it changed the candlestick time frame up here.
I see.
So let's just go back up here and change that to 4 hours.
Yep.
And we'll do 4 hours. Well, it's going to flip us back and forth.
Yeah.
But if we stick to 4 hours, we have the ability to choose the time frame here as well. Okay.
Just grab it and
Yeah.
roll it.
So we're looking at this right now.
What is a good time to pick?
I think that anyone who is learning the fundamentals of trading and investing really needs to stick to the minimum of a time frame of the 1 day.
Okay.
And the more risk averse you are, the more cautious you are about your money.
Will that be the 4 hour?
No, you're going to even go the other way. You're going to
Okay.
go from 1 day to 1 week. Okay?
Okay.
Which is just giving you a much bigger overview. Each of these
As far
candlesticks,
as the candles, though.
Yeah, each of these.
Okay, 1 week.
Each of these candles are 1 week at this
Okay,
point.
that's what I want to communicate.
Yes. So, for a week straight, the buying volume on this particular day was just super high, which was an indication that the trend was very strong and would likely continue, which it did. and the price went from 175 all the way up to 200 on Disney.
Yeah, I see. Now, if you're trading intraday,
If you're trading intraday,
right,
then yes, you're going to look largely at the 4 hour.
okay,
And you're going to be, again, you want to slide your scale so you can see depth in that, because
right,
the shorter the time frame, the less vacillating of the price.
right.
And so you're going to want to kind of pull that up so you can
Yes.
see the depth of the difference of price.
Now, I just brought that up because most of you won't be doing a 4 hour, you'll be doing a 1 week. But when you get to a position where you want to dip your toe into day trading, which I would say you want to go into the 1 week, and you want to do some investing first before you get into day trading, I suggest that you should really learn how to trade well before you get into day trading, right? Let's go to the 1 week.
Okay. And you can see that the 1 week, we have to do the opposite. There's such a difference in price over the course of that amount of time. We need to then scale the chart back to see less of the heights and the valleys, okay? But when you have that 1 week view, you're able to see more broadly where you're at the moment. So we're in a bearish trend that began really when this peaked out on March 8th of 2021. We've been consistently in a bearish trend, right? And we have got to a place because, so if we just looked at the candlesticks and the volume, we might not know that this would be the best point of time to take a position. But because we include the RSI, which is one of the most standard and basic indicators that everybody uses, we're able to make a decision about taking a position in this stock. So let's go back to adding the RSI. We come up here to the indicators. We search RSI. We select, there's a lot of these here, so we select Relative Strength Index. Oops, sorry.
It's okay.
Okay, Relative Strength Index. Why is it jumping on me? I'm sorry, Larry.
Hit the X. But yeah, there. Yeah, X out there, that's why.
Okay, so back to the RSI, and now we are taking 3 indicators into consideration in our taking a position. We have the price action, which we do consider to be bearish. We considered that once it hit an all-time high of $202, a lot of the institutions began to take profits, okay? And the price has consistently trended down. We got into this area where the overall market began to be bearish and pushed it even down further. At this point, we began to get interested because the bears have taken over control, which meant that we're not buying at a premium. We're not buying at the top. We're buying when the bears have control. And we're not afraid of that because we're investors.
Because we buy red and we sell green.
Correct. So we saw the bears gain control the day that this closed below the 50% mark, okay? And that's when we started watching it. That's when we began to look at this from a daily perspective to see when it might bottom out and we might consider taking our position. And it did that a few days later. We see that it broke below this area, which is known as oversold. Okay, which means that there's capitulation. People are getting afraid. They can't afford to take any more loss. So as they're unloading a great American company, we are acquiring a great American company.
Loading because every time a stock is bought, somebody sold it. And vice versa.
Yes, sir. So now this didn't mean that we were timing the market and we were going to buy all the Disney we ever wanted on this day. This simply created a starting point for us. And we began to say, okay, at this point that it's been oversold, we're going to begin to take a position. Okay, we spread that out over time, and we've come down and touched the RSI one more time. This is the weekly view we're on right now. Okay, and you can see that in the past, whenever it's gotten oversold on the weekly, it doesn't stay there. Okay, and it doesn't go back in a second time. So it vacillated here briefly, and then from that point forward, for the following year, it pretty much went up every day.
Yeah.
And so right now we've broken over and oversold. It has come back and slightly touched, which is quite rare. And we're still taking our position. We're not all in right now.
Right.
But at this point, if this continues to perform as it has for decades, and it's going to continue to move, and when the bulls take full control and it breaks above the 50% mark, it's at that point that we're going to be looking for the overbought conditions in which we would begin to take profits.
There we go. For those of you that want to know when to take profits and how to do profit taking, that's when we take profits. When it's green and the bulls have taken over. When do we buy? When it's red and the bears have taken over. All right? Hey, I think that was pretty good. Hopefully you guys, this is very introductory.
Yes.
But if you understand this, you could really build off of these principles. I wanted to give you enough technicals so you can now be on your way. What I suggest for you guys to do is find any stock, pull these charts up, and you could use it any platform, though we're using TradingView, you can use Webull, and I suggest that you just practice. What's going to get you good at this is just practice, 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 okay? And so when you go on to some of these YouTube pages, you see all of these lines, you're going to begin to understand where they are with it, and it's going to help you make a decision on should you be buying, holding, or selling a stock or a crypto. Hey, we want to say thank you to my good friend Josh Nichols for his technical analysis, and you will be hearing from him later on because we are going to further partner in helping you. He's going to be starting his own page, and we're going to be helping you with this. Okay? All right, we're going to leave it right there. Stay tuned for the next lesson.